It's the fear that there's going to be mistakes, which there will be. It's a valid fear.
The mistakes that are made are what's going to make the people that are making those mistakes. It's going to make them better. That's how they learn.
That's good.
Hi, class is in session. It's time for Shoperations at accounting. Hi, class is in session. It's time for Shoperations at accounting. Hi, kids. Hybrid teams, for Pete's sake. I'm trying to manage through screens, but I can't figure out which Zoom window's my next meeting. Well, since 2012, my firm's been in the cloud. Join us as we go deep. I'll try not to run it to the ground. We're sharing profit and loss and managing back office. The tax staff just quit. Tried to hire on LinkedIn, no luck. And scope creep, team count, CAS, automate tax, compliance transactions, ID and bottlenecks. Come on, ops. Scotty, wait a minute. It's my firm, dog. I know, and I said you could run it however you want.
Introducing the star of our show,
Scott Scarano, EA.
We're gonna have a problem here.
Welcome, students. I'm your substitute teacher today, Matt Kidd, interviewing the one and only that you all know. Today is going with the name Scott Scarano, EA. Welcome to your own show, Scott.
It's a name I haven't used on this show. I don't think Scott Scarano, EA. Thanks for coming on today, homie. Appreciate you.
Thanks for being here. I'm just going to dive in fully into this hosting role. But,
Can I insert the disclaimer? For our students, thank you for substituting. The disclaimer is, this is the first time in the 4 years I've been doing the show that I've run out of episodes. First time ever. And I didn't know what was going to happen next week when we're supposed to release an episode. You texted me during the week, Matt, and first off, thank you for sharing that. I was on your top Spotify Wrapped. So Accounting High was Matt's top listened podcast. So what better person to have come on and interview me than somebody who's been listening to the show. So thanks, homie.
Yeah, and I expect that to be the album cover art when you do the Jason Staats diss track, since he came in at number 2 on the list.
They not like us. They not like us. Yeah. All right. Nope.
So we'll kick it off. Tell us about how you got into accounting.
Can I go back as far as high school? I can go back.
You can go back to birth. We're both sons of CPAs.
I'm a grandson of a CPA too. So this was like predestined for me. When I was a kid, my grandfather had a CPA firm and I looked to that as a sign of success. He had a lot of employees. He had an office. He's supporting his family and he was a CPA. At his firm, it was up in New Rochelle, New York, Frank J. Scarano and Company. He mostly did audits for nonprofits. They did some taxes too, but their big bread and butter was nonprofit audits, compilations, things like that. They had some really big clients. I remember my dad worked for him, and my dad was a CPA too. He worked for my grandfather when I was really young, but he would get fired a lot. They did not work very well together. They just didn't get along. So my dad went and did other things. He went and did sales. He went and found his way in other areas. And during that time, my grandfather started a software company within his firm. So a GL that focused on nonprofit accounting. This was DOS-based. This was back in 90s, late 80s. He was building a software. He hired some programmers. So not only did he have CPAs on staff, he had some programmers too. And he was trying to build software within his firm for the clients. So fund accounting software to do nonprofit accounting. Eventually, he realized you can't do that within your firm and had to split it off. And so he split it off into a new company and he asked my dad if he could take it over. So my dad was looking to go do something different anyway. I guess sales wasn't always his thing. And he was also looking to move. So he picked me and my brother up and my mom and moved to North Carolina. So we lived in New York at the time, moved to North Carolina and took that business over. From that point, this was 93. And I was about 9 years old, and my parents owned a accounting software company. I don't know if it was my dream, but this was the path I was on. I knew I was going to be an accountant. My dream was to be an actor. My dream was to go and do something entertainment wise, but I ended up thinking I was going to go to school to be an accountant. So all throughout school. I was good at math. That came real easy to me. I placed out of all the math classes. I was always placed in like the highest math classes and then aced out of it. So when I started college, I didn't even have to take any math classes. And that was my path. Predetermined path was just to go into accounting, into college. I never really questioned it up until I got to college. That's when I decided that wasn't going to be for me.
So you really were pre-ordered. Like it came natural for you. I mean, all the math stuff, like, and that's how we talked on my episode. Like it wasn't natural for us. Like we knew what the career was going to be. So you fought against it a little bit, you and your brothers. For me, I didn't even fight against it until when I got to college, I then rebelled and said I was going to be a rapper, an actor, a screenwriter, a director, and I wanted to do all the things that weren't business. Which I think you've done all of those at this point, haven't you?
That didn't come till later. That didn't come till after the firm. We're not going to talk about all those things either. Today's a Scott episode. We'll get into that too. So I actually went and changed my major. And then, as you may have heard, as our students may have heard, I got heavy into drugs. I got arrested for selling drugs. And then I went back into accounting. Like it was waiting for me with open arms after I got arrested. I went back to school, straightened my life out, and dove in headfirst. And that's basically what I've been doing since. So that was like 2003-ish. But yeah, I went back to school, finished up my degree, got my accounting degree, and then immediately I worked at some CPA firms. My dad had a lot of connections in the area because he knew a lot of the CPAs because they sold his software, or they worked with his software. They worked with nonprofits. He knew a lot of the nonprofit CPA firms. So I got a job at a couple local firms, internships while I was still in college, and I made some connections. And I started getting promoted too, like within the firms that I was working at. Interned at a firm just doing taxes. They promoted me to audit. Then I got fired. I'm not a very good, I don't know. I got fired from a couple different firms because I was insubordinate, or I just wasn't like listening, maybe.
I think that kind of comes with the son of a CPA.
I knew better. I always thought I knew better.
Like, because we grew up in it. So like you felt like you knew the business better than the senior or the manager who was supposed to be telling you how to do it.
Might have just been my problem in life. I always wanted to do things my own way. I'm very stubborn, hard-headed, and I always wanted to do it my way. So one of the reasons I got fired was I was listening to music while I was during an audit, and the audit manager or somebody told me I couldn't be listening to music. So I put my headphones away while he was there, and then I put them on after, and then somebody else ratted me out when I put them on after he left. And, that was one of the firms. Another one, I was on the audit team, and I don't know. I guess I just wasn't cut out for it. And I'm not going to say that it was too boring for me because I kind of liked all the stuff I was doing. I liked the people I was working with too, but I just wasn't cut out for it. So the audit thing wasn't for me. And I was at a crossroads at one point after I lost like my second or third job. Plus, having a felony isn't easy anyway to get jobs at really bigger firms. So these were like medium-sized firms that maybe overlooked it. But I was at this crossroads where I couldn't get a really big corporate job. And I got a job offer at one of these firms that did a lot of government audits. And he was going to pay me pretty good. He was going to pay me like maybe $60,000, $70,000. And then I had another job interview at this place called Paget Business Services, which I honestly thought he was a recruiter. When I went into the interview, it was just this one guy. He had his own little shop. He did write-up for small businesses and taxes. So it was like tax, accounting shop. He wasn't going to pay me pretty good. It was like $35,000 he was going to pay me, maybe 40. But something he said during the interview, he said he's going to be retiring in 5 years. And it was a really small shop, but he was like, he's looking for somebody to kind of take the reins and potentially buy it from him eventually. And he took a liking to me, even though it was less pay than the other job. It was a really hard decision for me to make because I had a young child at the time. He sent me to do like marketing training and stuff to help grow the firm. But the firm was at that stage right around 100,000. That's how I got into accounting.
Okay.
That's the story of how I got to the firm that I'm at now.
But that guy was taking a big risk, only bringing in $100,000 a year and paying you 35, 40 grand. And that's, I mean, he was giving up almost half of his money when he brought you in.
And he still did too. As I grew it, as I helped him grow it, it was a profit split. I negotiated that my second year in, that if I was going to keep growing it and eventually buy it from him, that we would do a profit share. So it turned into 50% of the profits, and I was highly motivated to grow.
So then did you actually work there for 5 full years? Or was
5
that
years, yeah.
Okay. And he then the seller did actually retire after 5 years.
Yeah, so this was 2010 that I started there, and he did retire, and I bought it from him in 2015.
Okay. So started out $100,000 in revenue. You were helping to grow it as I'll call you a quasi-income partner with the revenue split that you had for 5 years. So started at 100,000. After 5 years, where were you at when you went to go buy the practice?
Yeah, the practice was at about 500 when I bought it. Let's see. So I got the books open. We were at like 540 at the end of 2014, and I bought it from him sometime in 2015.
Okay. And how much were you working in that stretch?
A lot. Always working. I lived at the office. My wife would come bring me meals at the office. I was working a lot. But the owner didn't work that much. Once I started to fully take over and we started hiring people, he phased himself out pretty quickly because we were doing different things and he didn't want to change and start using all this new software and doing all these different things. So he had the wealth management part. It was HD Vest at the time. And he mainly met with the clients that he was doing wealth management for. He still did some taxes too, but mainly he did their taxes, and he was doing that. And I was growing the firm. I was doing CAS. I was doing write-up, bookkeeping. Those were the years that I found Xero, and that was when things were just getting started for me for the other part of the firm. So it wasn't just a tax shop anymore because we were doing books for a lot of those people, but I started heavily investing in the marketing for that, and meaning investing my time and figuring out how to capture new clients. And so we can get to that part of the story too.
Okay. Yeah. We'll circle back to the wealth management side since I think that's something that's been bouncing around a little bit, but we'll stick with the
Sure.
core firm for now. So you bought it in, was it 2015 when you actually closed on it?
Yep. Probably mid-year 2015.
Coming up on 10 years, walk us through what's changed in the past 10 years.
Yikes.
From grinding away on a $500,000 practice. I assume, how many employees did you have? Did you have any employees at that point when you bought it?
So when I bought it, so we were in a really small office, little office that you walk in, run room, and then there's 2 offices. There's a storage room and a little kitchenette and bathroom, but that wasn't even a room. That was just part of part of the main room. At the time when I bought it, we had 6 people squeezed in that office, I think, at the time that I bought it. I packed somebody in the front. We cleared out the storage room as much as we could by scanning things in, shredding, and we had 2 or 3 people in there at the time too. And we sardined that office until we couldn't fit anybody else anymore. The owner owned that building and he really wanted us to stay, but we ended up finding a new place, and I had my ops manager buy it. Rather than he didn't then get any equity in the deal. He's my ops manager now, but I said, here's a way that you can still make some money. You buy the office and I pay you rent. Since at the time I was looking at buying a new house, and we were about to have we had our 3rd kid in 2017. So trying to remember, the year my son was born was 2014. So I had 2 kids at that time too. So eventually we did end up buying a new office in 2016, relocated. And at that time, I think we packed in 8 people in that small office. And so we moved, we had a lot more space, nice, big, spacious office right in the best area in the triangle. So you could get there from Durham, Raleigh, or Chapel Hill within 20 minutes. It was like central, right near the airport. Everything was physical for me at the time. I took a map of all of our clients. I pin dropped all of their addresses. I dropped them into Google Maps, and I looked at where all of our clients were. We were doing a ton of tax returns. So this was we had clients everywhere in the triangle, but there was that one middle spot I saw right near the airport was the central location for everybody. So we found an office there, and I also found a house there too. So I moved my house and the office 2016, and we had a good spot, and we kept growing.
Okay. So 2016, you've got 8 employees, a new office. What are you looking at for revenue at that point?
We closed 2016 at about 960, so just under $1 million.
Okay, so you went from buying the practice in 2015 to really when did you buy the practice in 2015?
Mid-year 2015.
So mid-year 2015, $500,000.
Purchase price was $550.
And then in 2016, just 18 months, you're at 950,000. Was it 900,000 you said?
950, 960.
You effectively grew your recurring revenue by $460,000 in a 6-month period.
Yeah, I remember that year.
Do you remember anything besides living at the office? I assume you had to have been living at the office at that point.
It was a blur. I was living at the office almost. My wife would come deliver meals for me, and I remember sometimes I would be there till like 2 or 3 in the morning. It wasn't. I don't look back on that time fondly, but I was motivated and I was growing, and I was getting a lot of attention from the franchisor too at that time. They were like showering me with attention and gifts and prizes and awards and stuff. So I felt like, and I was one of the youngest franchisees. At the time, I was the youngest. I might still be. I'm not sure at the details now, but I was the youngest. So it was like I was the future for them. I was like the poster boy for like what you can do differently at your firm. And I was doing things differently at the firm, and I was growing faster than anybody else at the time. At first, the goal was to get to $1 million. And I ran fast to get there, as fast as I could.
Did you hit a breaking point, or was it more of a slow realization that you couldn't maintain the pace that you were running in that couple of year stretch? Because you've continued to grow since then, but not doubling in a 1.5-year span.
I don't think I hit a breaking point at that point. I just hit a ceiling, and I couldn't grow past 1.2 million. When we hit $1 million, it was just, okay, the gears switched, and now we got to, like, the next goal turned into 10 million immediately. Like, there wasn't even a breaking point. It was just a sea change of, okay, now what are the things we have to do to get to 10 million? I had no idea what I was doing. Like, even with the growth, I didn't know what I was doing. I just stumbled upon things that worked. So we try something, and if it worked and we got new clients from it, then we did more of that. We could talk about some of those things too, but the reality was I had no idea what I was doing, and I still didn't. And I hit that ceiling, and I kept trying all the different ways to keep growing, and I just kept losing clients and losing people. It was that attrition of, like, we'd lose people, and then we'd replace them, but we'd lose clients too. And then we'd replace the clients. We'd keep growing, and then we'd lose more people. All of my staff was in the US at that point too, in the office. It was physical office, and everybody was coming in. We had a lot of clients coming in too, but we were gaining ground and getting a lot of new clients overseas and all over the US. It opened up the option for people to want to work remotely, and I let them maybe 1 or 2 days a week, but we were still going into the office at that time.
And what year was
just
that?
For context. This was still 2017, 2018.
So 2017, having remote workers was a rarity. I mean, nobody was working remote in 2017.
No, we tried one person that we hired, and then her husband moved, and then we kept her on as a remote employee. Didn't really work out. Tried, didn't really work out. That was like 2017, 2018.
So I'm curious, when you were talking about all of the different experiments, different things that you tried, in that process, you fail a lot. I mean, when you're doing that. Mm-hmm. And the way that you speak, it doesn't necessarily sound like an accountant to me as you think of an accountant. So I'm curious, do you consider yourself an accountant or an entrepreneur?
Oh, great question. At that point, I still considered myself an accountant. Nobody could question me. I was an accountant. I didn't know that many accountants anyway at the time too. It wasn't like I was in any of these peer groups or communities. And you don't know too many of the local people when they're your competition. I wasn't meeting any other accountants at that time. So I didn't know I wasn't an accountant. I didn't know that I was trying to be an entrepreneur either. I just surrounded myself with entrepreneurs. So I was more like my clients than I was like an accountant, I guess.
Okay, so we're in 2017, 1.2 million, throwing darts at the dartboard, seeing what sticks. You're starting to dip your toe into remote work. Had you already moved on to Xero at this point? Is that where you were getting some of that international work? Yeah,
I mean, our network, the franchise was using a proprietary software. And
was it DOS-based?
Yes. And then they moved to CSA, ACS, and it was all the Thompson Reuters suite. If you want to hear us rant about Thompson Reuters, you can go listen to Matt's episode. And I wasn't liking what that was giving me at the time. And this was even before we moved into the new office. So this was pre me buying the firm. We started using QuickBooks, and that was promising, but that was not a very good product. But it was online, and it had some things that we could automate some stuff. And then we had a client that found Xero. And immediately there was something about it. It was just clean, the name of it. And I really trusted this client too. I think it was partially the client because I liked all the other stuff. I loved the brand, his brand, and everything that he did with his business. And he found Xero and he was using it, and love at first sight for me. It was like I was not too happy with all the other green softwares that were messing with ACS and QuickBooks. My family was not a big fan of Intuit. They're developing software, and Intuit was their competitor. I saw something different, and I immediately identified with it. And that's how I started meeting other accountants that were like me too. It was Xero's XeroCon in 2017 in Austin. That was the first XeroCon I went to. And that changed my life too. I started meeting other accountants that were in the cloud, that were doing things differently, that were getting clients geographically everywhere. They weren't just in that one physical location. And so I started networking with them and learning more and picking up some new tricks. And then in 2018, I was invited on Xero's Partner Advisor Council, XPAC. That changed my life too.
They couldn't come up with a better name than XPAC?
XPAC? No.
XPAC?
No.
All right. Well,
Partner Advisor Council. Yeah, we love our acronyms, our accountants.
Hey, it's fine. They were spending their money on development. QBO was spending on marketing. That's fine.
Yep. Yep. Exactly. Yeah.
Okay.
Xero went after accountants, though. That was their bread and butter. I didn't realize I was in a bubble with Xero. I didn't realize how many people weren't using Xero. I just saw the accountants that were using Xero, and I saw their directory. And then so as I started tinkering with that, and I saw clients were finding us through their directory, I really invested the time and energy into making sure we showed up in that directory everywhere in the U.S. And we did, and we grew. So that was really the fuel for most of our growth. There was one other pocket of growth that we hit before Xero. That was a local franchisor, and we started doing all of the franchisees, and we were the required platform that they had to use. So every franchisee of this franchise of gas stations had to come to us, and they were all over North Carolina. That was a big, big pocket of growth. We ended up dropping that business, and we cut ties with them eventually just for other reasons, but that was something that really fueled a lot of our growth, was that.
One thing I want to make a point of is you didn't realize that you were in a bubble. Mm-hmm. And I think a lot of firm owners find themselves in that situation because whatever bubble they're in is they think it's the norm. So for you were in a very forward-thinking bubble that it seemed like everybody was doing what you were doing in 2017, 18. When
felt like it.
You still had 80% of CPA firms were purely in-house servers running in 2017, 2018. So it felt like you were just middle of the pack, when if you took the step back and looked at the entire industry, you were in the top 5%, 10% of people doing this stuff.
Didn't know that though, because I'm still comparing myself to the others in my little peer group and seeing these other really big firms, progressive firms, and what they were doing. And those were the only ones I saw. One of them was B&A CPAs in Charlotte, North Carolina. So I started modeling off of them, and I started looking at what they were doing on their website, and I found them through the directory of Xero. And then in 2017, I met Jason Ackerman, who's the son of Bernie Ackerman, who was the other son of a CPA. So we're not going to talk about that, but that's how I met him. I met him on a bus at a XeroCon, but I had known him before. I known of him. And same with some of these others. I knew of Acuity because I saw them on the Xero directory. So on that same bus, I met Matt May from Acuity. It wasn't till years later that I met Kenji. So it was like, still, I'm in this bubble, but that's all I saw. I had my blue tinted glasses on.
Okay. So we're kind of we got up to the point where you've been grinding like I'd call it a traditional firm owner until you're kind of first connecting with your community.
There were still some other things that were happening around that time. And that was around the time, I wish I could pull up the email, but somebody emailed me to do work for his wife. And I saw his email, and he was just looking for an accountant for his wife. She had a psychiatry practice, and his email signature was orange. And it was like a little symbol, and it said, Entrepreneurial Operating System, EOS. He was a coach, or he was a business coach, but he was just looking for help for his wife. And I clicked on his link and I saw EOS. I said, ooh, this is fascinating. This is right up my alley. This is what we need. At that time, we were stuck at 1.2 million and we couldn't grow, and I couldn't get out of my own way. And I kept blocking us from growing by doing stupid stuff. I didn't know how to run a business. I didn't really know how to be an entrepreneur. But that email changed everything. You know what it was? I looked through it, and then I had this, I couldn't stop thinking about this EOS. And I had this idea to reach back out to him. We definitely wanted to do his wife stuff, but I said, what if we did a trade? What if you taught us how to do EOS, and we'll do your wife's accounting and taxes and everything. We'll get her straight, and you can teach us EOS. So he did. And he saw it as a great opportunity to potentially work with other accountants. I think this was set 2017. I'm pretty sure that's when this was. Maybe late 2016. And so he said, you got to have a management team. And he told me some of the things that we need to do to get started. So I put together the team, and that's when we started doing EOS. One important thing to note is also the team that I had. So one of the guys that's still running this firm, Christopher Leon, he's gone by a couple names. He was Topher in high school. He's Chris to me now, but he's Christopher to most of the people at the office. He's the one who bought the office. And so he was the one, and he's basically been my ops manager. At the time, he was still doing a lot of client work too. This was the integrator. We didn't know what an integrator was. I didn't know I was a visionary. We didn't know anything about EOS. And so when we first started doing EOS, he had us take all the tests and do all the things to kind of get acclimated, read all the books, read all the articles. And one of them was taking, your integrator visionary test, answering the questions. We have a few of the books, Rocket Fuel, What the Heck is EOS, and obviously Traction. He scored off the charts for the integrator. And I'm a visionary. Like I don't have to deny that. I didn't even really have to look once he started describing what a visionary was. And I always had these big visions for our firm, and I loved it. I latched onto that. Once I figured out what a visionary was and I saw all of my natural inclinations in life, I fit right in. I was like, I'm not that different. I'm different among a lot of people, but I'm not that different. Once I started seeing the description of who I am as a business owner, it started making me feel more comfortable too in running my business and running my firm.
So is that when you shifted from accountant to entrepreneur?
Yes. That was the start of running this like a business. So it went from technician, accountant, and I probably would have stayed at that ceiling. If I hadn't found EOS, I probably would have been stuck at 1.2 million still to this day. These are the years. It was like 2016, 962,000, 2017, 1.285, 2018, 1.227, 2019, 1.291, 2020, 1.220.
Okay, so it was really just 21, 22, 23 that you really started to grow.
Grow again. Remember, it grew really fast to get there.
Yeah. So you put relatively, you plateaued, leveled up, hit a ceiling, leveled off. But in that stretch where you were leveled off for 3-4 years, how was your workload changing? Because you were grinding at the start of that.
It was starting to be defined of what I wanted to do. So during the earlier stages of EOS, we had to put together our accountability chart and put together what it was, which hats was I really going to wear. You notice I'm not wearing a hat on this episode.
You got to show off the Slim Shady hair.
Yeah. What hats was I really going to wear? What hats was I going to take off and put away? And this is before I even had a hat collection, and I wore a lot of hats. I basically had a couple of M&M hats at the time, my little Kangol hats. I was doing everything, and my job consisted of sales. I was still doing review. I was still doing a lot of the accounting work because if they were over capacity, then I just got the work done. I just did it. I was still doing all of the marketing. I was still handling client relationships, obviously, like as HR and all the other stuff. We had admin people. We had 2 people that would handle admin stuff, but I was still overlooking everything they were doing. I was overseeing everything everybody was doing. and they couldn't tell me otherwise because I knew all the right answers. I knew what to do. I got us to this point. Buck stops here for everything. And I would disagree with everybody on everything. I was very stubborn. I drove some people away. Some people would just put up with me. But yeah, the buck stopped there. And that's how my grandfather ran his firm too. And I think that's why he hit a ceiling. And he was always, I don't know his numbers. I wish I had those and I could look at that. But he would always drive people away. That's my dad kept getting fired. And that's why things were happening on that side. And I think like I never learned for the lessons of my past because I never had an example or somebody to show me how to be different until I found EOS and until I started finding some of these other accountants that were a lot more progressive. Even at that time, there wasn't a lot of people doing EOS. So even when I got invited to the Xero stuff, a lot of these cloud forward, like tech forward firms still weren't running their firms like businesses. Not all of them. Some of them were. So I still had a lot to learn.
Yeah. But I mean, I think when you talk about the doing it your way, overseeing everything, I think that's the natural accountant inclination. I mean, that's why whatever percentage of CPA firms in the country are sole owner small firms. They're doing it their way and it works well for them.
The three little pigs.
Yep. They may have some staff turnover or they find the couple of staff that likes working the same way that they do. And they work with them for 30 years and then sell the practice the same time that the couple of staff are retiring because they don't know how to function without him.
Right. I fell into that same trap and I probably would have still been there until I learned how to get out of the way. You have to be okay with stuff not being perfect. You have to be okay with other people making mistakes. And you have to be able to trust people. That is some words that get thrown around in our world that don't really mean anything for most people. I thought I trusted everybody. I didn't trust them for anything because I had to oversee everything they were doing, look behind their back. Okay, they finished this. I had to go review it, make sure it was right. I couldn't have anybody else reviewing because they might miss it.
Can we drop in a ludicrous overlay right there when you say get out the way?
Get out the way. All right. So that was part of my lessons was getting out of the way and learning how to get out of the way and be okay with that. And that didn't come in until after 2020. That didn't come in until COVID. As much as I learned doing EOS, I still didn't know how to internalize it and really comprehend it. I learned stuff, but I didn't know how to put it into practice. So we still kept churning and hitting a ceiling and losing people throughout that 2017 to 2020.
What do you think it was that prevented you from getting out of the way or that made it hard to get out of the way?
Ego, pride, fear, the big things. Like I was afraid of losing clients. My ego was so big. I thought I knew everything and I had all the right answers. I built this so other people shouldn't even know how to do what I did because then they'd know all my secrets and then they'd take it over. They would run the show without me. And then what happens? Then I'm worthless. Then I'm not worth anything. I was scared.
Yeah, I mean, I think that's certainly I was the same way. I mean, it's the fear that there's going to be mistakes, which there will be. So, I mean, I think it's a valid fear, but you realize it's not nearly as voluminous as the fear makes you think it will be.
But you also, the mistakes that are made aren't nearly as bad as you may imagine that they are going to be, but also the mistakes that are made are what's going to make the people that are making those mistakes. It's going to make them better. That's how they learn.
That's good. That's going to be one of the social media clips.
That's what makes them better. That's where they come into who they are. And again, I didn't run into any of this until really after 2020. And all of that was by accident too. Like that's when COVID hit. And that's when I had to get out of the way.
Okay. So we're running a pre-COVID into the COVID and post-COVID era of Scott Scarano, EA.
Yeah. Still Scott. You know, remember the history. I was never Scotty growing up. That was never in my aliases. I was always Scott because I was this stubborn kid that knew everything. I knew what to do. And you call me Scotty, it's like a little girly, right? Or like a little kid. I didn't want to be a little kid. I was grown up. I knew everything. I was like, even though I was the youngest one in the franchise, I wanted everybody to respect me. I wanted everybody's respect, and I wanted everybody to look to me as like so I was hard to deal with at that time too. I mean, I don't take myself as seriously now as I did, but man, you didn't want to mess with me. You didn't want to call me Scotty then, because I would have gotten upset about it or something like that. That was partly some of the things that was holding me back, was all of that pride and ego and fear and everything. And just, I wasn't a happy person. I thought I was making money, I was growing, but I don't think I was that like satisfied or happy. Otherwise I wouldn't have been working so much. I wouldn't have spent so much time at the office.
Accounting high. Accounting high.
Tune in next Wednesday for Shoperations at Accounting High.
I still have this like, crazy personality. We had a lot of comic book clients that owned comic book stores. That was a niche I wanted to get into too. But like the biggest comic book store in North Carolina, that was our client, and he runs the whole convention. So my office was covered with the Funko Pop figures, all different like kinds of cartoony things, comic booky things. That was me. So you still had this like personality that I brought in with everything else I was doing. And so we attracted people that had a fun personality. I didn't look like an accountant. People would say to me, "You're not like an accountant. You don't look like." So that's what I just kept getting from the people that were attracted to us as they wanted to work with us. These were the people that were finding us through Google or through the software. They were looking at our team like, "You guys are fun. You're not like the other accountants that we looked at, when we were searching to work with somebody." So we leaned into that, and we did more of that, or we did more fun things because nobody else was doing it. I always wanted to do the things that nobody else was doing, or at least I couldn't see anybody else doing it.